very much. And I think instead of me sort of telling you who you are, I'll give you the opportunity to give the 45-second brief on who you are, why you're here, and what company you represent. So, Johan, go ahead.
Yeah, I don't know why I'm here, but I'm Johan Christenson. I'm a senior partner with HealthCap, which is a dedicated life science venture firm. Been around for 25 years. That's me.
Fantastic. Yeah.
Hi, my name is Miao. I'm a senior investment associate with Hadean Ventures. Hadean Ventures is a life science VC. We're headquartered in Oslo, and I'm a scientist by training, but then did more commercial experience, and then now in life sciences.
Yeah, and good evening, everybody. My name is Shaun Grady. I have the privilege to be the head of business development transactions for AstraZeneca globally, based in Cambridge in the UK, the real Cambridge, the first Cambridge. And I'm what in AstraZeneca we call a lifer. So I've spent my entire career pretty much in AstraZeneca. Maria said I was a bit of furniture in AstraZeneca, which I'm sure was intended as a compliment. So that was really motivating coming up here. So as such, you know, I've worked on the AstraZeneca merger and a lot of the transactions subsequently, the Pfizer defense and so forth, and spent an endless amount of time in Södertälje and Mölndal, Gothenburg.
Fantastic. We heard here in the beginning that it was a record year for M&A, but in our sector, the life science, the activity was actually quite low in 2021. And if you look at biotech, for example, it was the lowest in 10 years. But at the same time, going into 2022 now, if you just look at the 17 largest pharma companies, they have some 500 billion in cash. And add a bit of that on that, there's quite a bit of gunpowder in the works here. So given that, what does that mean for, in general, M&A activity, and in particular, sort of where do you think that M&A activity will take place? I don't know if you want to start, Shaun.
Yeah, no, so I'll kick off. So in 2021, AstraZeneca acquired Alexion for $40 billion. So it's quite hard to sit here and accept that it was a slow year for M&A. Over 2021 and 2020, we also did 2 partnerships with Daiichi Sankyo around their antibody drug conjugate program, and both had a $1 billion upfront and total deal terms of about $6 billion for both of those programs. So I think business development people in life science should deserve a pat on the back, because we actually kept the train moving through COVID. And I also think it's probably a little narrow-minded to look at M&A and business development on a calendar year basis, with all due respect to PitchBook, because it just doesn't work like that. And big M&A relies on 1 or 2, 3 or 4 really big companies doing something huge that's strategic, and you can't rely on that happening in any 12-month period. So I think a 3 or even 4-year horizon is much more informative in terms of trends around M&A.
So you're optimistic. What are you specifically looking for now?
So 2 things. I think, you know, if you're a company like us who've just done a $40 billion deal, our board are, you know, probably not racing for us to bring the next one. There needs to be a little bit of absorption and proof of, you know, the proposition on that transaction. But AstraZeneca is by no means done there. But then, you know, your point, PC, if you look at the firepower in pharma, and just take our good friends at Pfizer, for example, the amount of cash that they're sitting on, not least because of the vaccine unexpected revenues that they brought in, which were enormous, you know, unlike AstraZeneca, who did the not-for-profit vaccine approach. So, you know, they and others have got a huge, you know, war chest and armory. And, you know, one would expect that to be deployed over the next period of time. But I think the really important thing is that it's situational. You know, you can't say this is broadly applicable to the sector. You've got to look at a company-by-company basis.
Miao, are you deploying 40 billion this year, or?
No, I mean, as a venture fund, we are a much smaller scale in that we invest in earlier stage companies. The companies are heavily invest in R&D, so they're actually more capital like burning in order to develop the next drug or the next important diagnostics. But I think with regards to the M&A activity in life sciences, it is very true that because of COVID and other factors, there have been companies that have enormous amounts of cash on their balance sheet, and Moderna, for example, as well. And they will be looking to deploy them. And there has been expectations that M&A will rebound. And in terms of areas where we might see more activity, I think I very much agree with Shaun that it is specifically to the strategy and the case and the disease area, whether that align with that acquire. But I think traditionally, in terms of the data supporting the therapeutic areas that we see most of the activity or more activity would be oncology, followed by neurological indications like central nervous system diseases. And then of course the newest exciting technology such as gene and cell therapy and maybe like targeted protein degradation. These are innovative areas where people would like to build expertise in.
Yeah.
And rare disease is a
Right. Johan, what are you looking for?
No, I think we are looking for the kind of same thing. I mean, we have taken a pride to actually bring companies public. That has been part of the way we have financed companies. So we stay on also after kind of the IPO, sit on boards, etc. And as had already been said, and I fully agree, I think for now the IPO climate is where it is. It's closed. So we really need to think about other ways to finance the companies because that's really how you build value. You can never, in biotech, where I'm working, you cannot save money to build value. You need to invest to build value. So in order to actually raise money, you really need to secure that you syndicate. We are in the syndication business. That's kind of where we are as a venture capitalist. So you really need to secure that you syndicate with other funds that have deep pockets in order to continue building value. And I think we have been lucky to realize that we started to see that the market was really going down. And we said we cannot trust in going IPO because if you had asked me a year ago, all the companies went for crossover financing. And all the crossover investors were there, ready to put in a lot of money at reasonable valuations, and then half a year later you were going for an IPO. That's not the case today. And the crossover investors in our business are basically gone. So you have to find other investors, and the most obvious investors are other venture capitalists. And that's something where maybe we will come back to that, but we start to see inflow of capital, which was, I've been in the business now for more than 20 years, into Scandinavian companies was really hard, and even European companies to find, for instance, investors from the US. They were staying in the US, they were doing their business in the US. Now we start to see actually US venture capital firms, dedicated blue chip investors, start looking for investment opportunities here in Europe. For a number of reasons. I mean, it's still cheaper. In our business, I would argue that just looking at salaries and cost, etc., you run with the same quality from a science point of view. You run companies at a much less cash spending, which is of course extremely attractive. And in the US, there is still competition for deals. I would argue we don't have competition in that sense. We are still looking for other investors to join.
So even with this very, very volatile market that we're in, sort of given that you have this influx from US and venture capitalists and others, you don't see problems with refinancing your current investments or fundraising, for example?
No, I do see a problem because these crossover investors that we kind of trusted up until a half a year ago, they are basically gone. But what I'm saying, which is a positive thing, is that if we now have, the Nordic focus today and European focus, the positive thing is that U.S. investors are now realizing that there's a lot of opportunities in Europe, and they are attracted by investors like us to guide them into good opportunities. And that's an extremely valuable thing, because that's how we can continue building value.
Yeah. You see the same thing? Yeah,
I agree. And I think the fact that US investors are putting more capital into Europe, into European the Nordic life sciences companies, speaks to the high quality of science and just the level of innovation that's come out of the institutions, the universities here in Europe. And that's more and more recognized. And of course, the valuation is definitely at a discount compared to the US assets.
So it's cheap in Europe now?
Yeah, I think so. Compared to the US valuations, definitely. And then in terms of the quality of companies, and then you see that the great companies with really innovative science, they always get funded. And then, of course, there is always, I think, a risk for further financing because our industry is a very capital intensive. Like, you have to heavily invest in R&D and for a long time. So in hope of that, the trial becomes a success, then you have the next drug. So there, it's quite reliant on capital and the source of capital. But I think in the end, it's the data and the science that result in the great innovation always win and get funded.
Yeah, and I mean, cheap's not a good word, is it? I mean, nobody wants to buy on the cheap or sell on the cheap. That never works out well. There are probably lower valuations, but equally the risk appetite in the US is far higher than in Europe, including the UK, although that's potentially improving. But Mia's right, it's down to the science. If people have got really interesting, cutting edge innovation, then the farmers are going to be queuing up. And actually the market circumstances are a little irrelevant. We're all going to be looking at it very closely. Any good deals that we do, all the other peer pharma have looked at them, and vice versa. When you see good deals being announced by GSK, Pfizer, any of them, we've probably looked at it too. So it truly, really is about innovation and the quality of the science, and that's not cheap.
Yeah. No, that's true. But it's an interesting aspect. I mean, I don't know if you like this, Shaun, but one way for us to, of course, get a good valuation is to have competition for a deal, right? And the number of potential acquirers have increased over the years now. Mm-hmm. If you look on high-valued biotech, biopharma companies, it's really been going up. So it used to be AstraZeneca, Novartis, and alike, but today you see others like Horizon and Jazz Pharmaceuticals and others. So the universe of potential acquirers has increased. And I think that is also helping out to look for a good M&A climate.
No, you never want to buy something that you're the only person at the table, particularly. That's not a fulfilling feeling.
Exactly.
But the comment was made on the earlier panel about bilateral transactions. The orchestrated sale process, going out to 20 people, and you've got to get your diligence done by then and your NBO by then. They're rarer and rarer. I think it's competition, but it's narrow competition with the people who are going to be still standing at the end of the process.
Right. Yeah.
I mean, we talk a lot about, it's an innovative sector, obviously, and also the innovation, the pace of innovation arguably has gone up during the pandemic. We've seen a lot of innovation, in particular around patients and consumers accessing health services through new technology solutions like telemedicine or consumer-facing apps, etc. But it's also been hard to commercialize some of these, and there's also quite a bit of regulatory hurdles for some of them. Where do you see sort of the intersection here with life sciences and tech and the development? What's going to happen here?
Yeah, I think that's extremely interesting. I mean, you're absolutely right. We saw a boom in the way people start using the digitization has of course exploded. The question you have is what's the business model here? I mean, how do you actually bring our business, which is the classical drug development business together with tech and digital. We start to see this, both from a regulatory point of view. I mean, there are quite a number of digital therapeutics that have been approved now by the regulatory authorities, both in the US and in particular in Germany. I think they are a little bit ahead here with a specific regulatory focus program to actually have digital therapeutics to be approved. But what I do see also, rather than having specific digital therapeutics, there will be a consolidation of these different digital tools. And some of them will actually be linked, that's at least my personal view, with pharma companies and pharma products. One example that I really like and where I believe you will see a lot of the next years is what we call remote patient monitoring, where you have medical technology with digital approach to follow patients. And thereby you can actually, rather than going for rare diseases, which we do a lot, we have done that over the years, and AstraZeneca has moved into that as well by buying Alexion. You can actually, in my view, with remote patient monitoring, you can individualize patient treatments also in larger indication areas, which will be an extremely interesting aspect. You will have rare diseases where biology is actually driving the specificity. You understand the disease to its very specific single mutation, whatever. The larger indications where you don't have that very specific biology, you can individualize by having patient remote monitoring. So suddenly, I would argue, you have a completely new area to move into, but where you still work with kind of the patient-centric approach and individualized treatment.
You see the same?
Yeah, I think a comment on the use of digital technologies and how that impact our industry is one aspect of that is the use of machine learning or AI for drug discovery. So there are, I think within the value chain, there are different applications where they could really add value, whether it's to better design that molecule or to see which is have a better success rate in running clinical trials. And they have been really, I think, an explosion of approaches here, as well as startups, and then I think also lots of the established companies are moving into this space to build capabilities, to invest in talent and having partnerships around the space. And I think with regards to how are technologies in improving drug discovery valued, it is still maybe an open question, because it's such a long a timeline of having a drug from idea to market, and how big is the value add from machine learning approach. I think it's maybe an open question, but I believe that this technology will integrate deeply into the industry.
How do you view this at AstraZeneca? I mean, there's a lot of talk of artificial intelligence too, right, in this.
Yeah,
when you look at the companies that have been listed, they haven't had great success, actually, and it's been quite costly.
No, when I was looking at your questions coming down on the train, I think there were three things. Firstly, I think the pandemic kind of accelerated everybody's digital strategies, so they weren't kind of new. There were things that people were working on, and it was definitely a catalyst for acceleration. So during the pandemic, AstraZeneca ran an asthma trial entirely remotely, with patient monitoring and what have you. Nobody went to the hospital and, during COVID and all the rest of it. And we estimate that the trial was completed 6 months earlier and for half the cost. So you get proof points like that, and that's not going to apply everywhere, is it? But you then say, okay, how do you embed that came out of the crisis? So I think that's definitely been an accelerant. I think the second thing is around AI and what have you. And I'm on the board of a small machine learning drug development discovery company for rare disease in Cambridge. But I think what's perhaps not appreciated is Big Pharma are doing a lot of that work themselves, actually in-house, slightly in stealth mode, and actually have a lot of, well, maybe we're kidding ourselves, have a lot of those capabilities in the building. One of the key things is getting, the right people. It's the war for talent, getting people who otherwise would be in IT companies or Google or wherever to actually see their careers in Big Pharma. But we're all certainly, working on that. And then the third point would be, a Google and the big tech companies going to come in and eat our lunch. That absolutely is not going to happen, because they do not understand drug discovery and development and what have you. What will happen is we'll work in partnership with those people, because we've got different skills and capabilities. And you had a lovely phrase about whether you can meld those two together is another matter, but I'm not sure that's an existential threat to pharma.
That's interesting. Any questions from the audience? I will start over there. Yeah.
I have a question for you, Johan, because you have been involved in really creating a lot of companies in the Nordics, and as this is sort of Nordics focused. Thank you very much. And you've also been involved in a lot of exits. Can you comment a little bit about one of the most successful M&A exits you've done in the Nordics? And is there anything today which prevents more of M&A happening with Nordic companies in life sciences in particular? Because I still think you flagged a lot of the attractions of Nordic life sciences, the science, the talent, and all of that. But there's still, I think, there is an issue with still shining the light on the industry as a whole and making them interesting acquisition targets. So if you can comment on successful deals you've done, exits, and is there anything in particular you see as preventing this from happening on a regular basis? What can we do better?
Sure. Now, it's two aspects in your question. One is to kind of show that we can do it. And of course, I mean, I can take the example now since AstraZeneca is here on the stage. I mean, one of the companies that we started really from bench was a company called Wilson Therapeutics. And that's something we very quickly built. We took it public, again, from a financing point of view. And we ran clinical studies, and they were successful. And we started to plan for phase 3 and further on. But at the same time, which is our business model, of course, you should secure that you can bring a product basically all the way to the market on the basis of the financial, the investor you have around the table, or through an IPO, not to be dependent on whether or not you have to make a deal in order to move to the next step. But here, you always have to work with potential partners, and we did. And in this case, there was a competition, and it was won by Alexion, and Alexion bought Wilson once it was public, which was a fantastic story for a number of reasons. And then now we can see that it's still a good product in the home of AstraZeneca. The product is still doing very well. So that's a good example.
So we bought it twice.
Yeah. So that's a good way to. But the other part of your question is there are not that many good examples, I would argue, for M&A of Nordic life science companies. And if you start digging into that, I mean, one is the kind of macro perspective, which is it's about relation building. And if you look on life science M&A, I think it's about 70%. I don't have the latest figures, but somewhere around 70% of all the M&As are US to US companies. And then the next grade, you have US for European companies, and then Europe to Europe. But what I'm saying is that we haven't really yet been able to attract US pharma companies to acquire to the amount that we believe we should, based on scientific quality. So we work extremely hard on this to secure that our companies are out there, build relations, And also what I mentioned earlier, to have US investors coming into our companies will also facilitate this process. Because I argue, you argue, I think you agree as well, quality-wise, science is as good here in Europe as in the US. It's not a quality race, it's other stuff. And one is, of course, access to capital. And that's why I, again, for the third time tonight, say I'm very happy to see that our fellow US VCs are starting to come over, because in my view, it's not competition to find deals to invest in. It's lack of capital rather than the other way around.
We're slowly running out of time, but Gabriel, are you...
No, never mind. Give this gentleman the question.
Oh, Hadean.
Oh, actually, I'll give you the mic. There you go.
Yeah, thank you for the very insightful discussion. So on the topic of attracting investments, obviously a common theme here was America. Attracting America wealth. But when you look at emerging markets, for instance, like China, is arguably scheduled to become maybe the biggest economy in the world by after 2030. Is there kind of like a target, maybe area in the world, or a few? What economies are you, or what countries are you really like looking to maybe attract more capital from? This is a question for all of you.
Yeah, so I'll a quick go at that. China is huge for AstraZeneca. So we've got like 30,000 people in China. Last year we did $5 billion of revenue in China. I keep mentioning Maria. Maria was in China for a couple of years. So I think that China's, we're the biggest, largest multinational in China. But mostly until recently it was based on older brands that commanded a premium price because of customer confidence and what have you. And that's changing with a so-called value-based pricing policy that the Chinese government have put in place, which means that people have really now got to focus on innovation in China for China and in China for the world. And I think it's a horrible generalization, but I think China was pretty good at copying and being a fast follower. And now the question is, what is the innovation, what is the origination that can come out of China for China, but for companies like ours, for global optimization. But it's not only China, I mean, all BD people do all these heat maps of, where are the good high quality, high impact publications coming from, where are the patents coming from, Singapore, you name it. There's different pockets and places. It's a global game, It's not about the UK, it's not about the Nordics. Big pharma partnering is global.
And with that, I think we have to close, and this will be the one sector then where Google will not eat your lunch, so we'll take that with us and come back to that next year. Thank you so much.